Hello, Profit Hackers. I'm Jeremy Lott, the Chief Visionary for Foundation Accounting and Consulting. I owned a construction company for about 15 years before making a change to accounting because my accountants sucked. My goals are to simplify accounting for construction company owners, fuel your profits, level up your cash flow, and help you grow in a financially responsible way. So let's go. Hey, Profit Hackers. Today we're going to focus on the difference between focusing on cash flow versus focusing on debt payments. So to start with, I want to tell a quick story. I spent 2 years in the Philippines as a missionary for the Church of Jesus Christ. And while I was there, we came across a vendor that was selling custom machetes. And so, of course, my companion and I both decided that we needed custom machetes. So we ordered them and then waited. And when we got them back, we were so excited and they looked so cool. And they were all custom with fancy sheaths and the handles were all carved. And it was really cool. We were really excited about them. And so as soon as we received them, we decided we needed to try them out. And so we had a coconut tree in our backyard. And our laundry line was attached as like a wire from that tree to another tree. And that's important here in a second. But I decided that I was going to climb up this tree and try out my machete, cut down some coconuts. And so I had no problem going up the tree, got up there to the top, and I was hanging on with my left hand and chopping coconuts with my right hand, and they were falling down. And then my left leg got really tired, started cramping up. So I hugged the tree with both hands, switched hands with my machete, hugged the tree, and then switched my weight to my other leg so I could rest it for a bit. Then I switched back, and when I came back around to start cutting down more coconuts, I found that I had a big gash on the back of my hand. I still have no idea how that happened, but I kind of panicked. I'm up in the top of a 30-foot coconut tree with a cut hand now. So I decided that the best answer was to just hug the tree and slide all the way down. So I started doing that. And remember the clothesline that was hung on the tree, that wire? Right behind my knee caught on that. And I ended up leaving a bruise right there behind my knee. It was pretty gnarly. But so I wasn't going to make it to the ground just by sliding down that way. So instead, I decided the best course of action was to throw my machete and just let go of the tree and hang upside down from that wire, and then do a cherry drop from it, just like you do on the monkey bars at the, elementary school playground. And my companion was just looking at me all weird. And then I showed him my cut and everything made sense. We ran to the hospital, got me stitched up and back in action. But that was a story about focus. See, I was so focused on the coconuts and chopping those down up in the tree that I wasn't really paying attention to where my hands were. And I still have no idea how I ended up cutting my hand just by switching the machete. But I know it was because I wasn't focusing on that. I was focusing on the wrong thing instead of safety. Right? I want to kind of compare that to the big push on paying off debt. Paying off debt is a good thing, definitely. However, there's a more important focus that you need to have with your money, and that is cash flow and increasing cash flow. See, this whole push against debt came because back in the boomer era, and before that, the Great Generation, the mentality was that you do good in school, then you go to college and do well in college and get a degree, and then you go work for a company and you stay there for 30 plus years, and then you retire with a pension. And you're going to have this fixed income for the rest of your life. So now what you need to do is you need to reduce the payments that you have as much as possible so that you have more cash to be able to use as a retiree. That worked great until somewhere in the 80s, where companies stopped giving out pensions. And when that happened, a lot of people were in trouble because they weren't going to have a fixed income, right? And so because of that, a lot of people started turning toward individual investments or business ownership, and entrepreneurism really started to expound at that point. So that pension mentality where you only have so much to be able to spend for the rest of your life, and so you have to limit the amount of payments that you have by reducing debt, is an old strategy. It doesn't apply to these days because you're not going to retire on a pension. You have to come up with some way to be able to retire, whether it's owning your own business or through investments or whatever. But basically, there isn't a roof on your income level. You can continue to increase it. So because of that, the focus needs to change from paying off debt to increasing cash flow. What I mean by that is that you have all the money that comes into your bank account and all the money that goes out of your bank account. And the difference between those two is your cash flow. A good example is if you had an opportunity to make an investment that would cost you $5 in debt, a $5 debt payment each month, but you'd get a $10 income, your cash flow difference there is $5. And yeah, of course, the argument is that if you pay off the debt sooner, then your cash flow turns into $10 rather than $5. But the problem is you have to use up all of your cash flow for how long before you actually get to that point where you are making the $10 a month in cash flow rather than just the $5, right? So mathematically, it just doesn't make sense to do it that way. It makes better sense to focus instead on increasing your income levels. And I'm assuming that the majority of people listening to this are contractors or trades owners that are looking for ways to be able to make more money. And just one more note on that. There's a big difference between scarcity versus abundance. Scarcity is the mentality that the pizza is only this big, and so I have to reduce how many people are eating the pizza so that I can get more, right? Abundance is changing that mentality and saying, well, why don't we just make the pizza bigger? And there's no limit there. And then that way, everybody gets more. All right. So that's kind of the big difference. The last thing I would point out here is that one of the biggest advocates against debt is Dave Ramsey. And his teachings are wonderful for that person that is going to retire on a fixed income and then only have as much cash flow as the same amount of cash flow each month, right? The other side of that is Robert Kiyosaki. And Robert Kiyosaki focuses on cash flow and making sure that you have positive money coming in each month, right? So paying off debt can be good, but it's more important to be able to increase your cash flow and focus on that. So if that means paying off debt, then that's wonderful. Otherwise, you need to look at creating additional income streams or increasing your income so that your cash flow increases, right? So don't focus just on debt. Focus on cash flow. And we'll talk to you later. Thanks for listening. If you found this episode helpful, please like and subscribe for weekly episodes to help you fuel your profit, level up your cash flow, and finance your growth. Until next time, go enjoy some green M&Ms and protect that cash.